Great. So you're now being recorded. So, so again, I just wanted to welcome everyone to our webinar. We are going to focus today on the PPP updates and developments and what you need to know. And they're literally, Mark is updating it by the minute because news is coming in to our forecast. So we wanted to, our agenda today too is, again, we want to welcome everyone, a few little housekeeping tips. And then we're going to hear from our presenter, Mark, which he has a fabulous presentation for us, tell you a little bit about future webinars. And also there is interactive time. So Mark has a lot of details. And so if you have a question, regarding the topic he's on, go ahead and put it in the chat box. And Jenny and I are going to track those questions. So when we get to the question and answer time, we won't forget to address those questions, but you will also receive, you're going to receive actually two decks. One is the deck that you're looking at right now, and that has, our future webinars. We have a lot of resources for you. And that'll be one attachment that Jenny, my assistant, will be sending you. And then the second one will be Mark's deck. Is that correct, Mark?
Correct.
Okay, wonderful. Thank you. And so you'll be receiving both of those probably later today, first thing tomorrow. And then we're recording this event as well. And so you'll get the recording. It takes us about a week to have it edited and then sent to you. And it'll also be on my events page of my website. Okay, we talked about the chat box. Okay, wonderful. And again, please feel free to, we want you to interact with each other. So everyone go in the chat box and put your name, your email address, if you want to share it with people, and what your company does, even our members, go ahead and do that. And so pretend you're face-to-face and you're exchanging business cards right now. Right? That day will come soon. Right. So again, to the hosts of the event here, I'm just going to introduce them very quickly. So we have Rebecca Dorio with RAD Training. Her expertise is apprenticeship training, especially in manufacturing. Mark Gallegos, who you're going to hear about, he's the star today. We have Gwen Griffin Harmon, my partner in crime. She owns Peace and Harmony Solutions. She is an all-around marketing professional, from graphic design, web development, social media expert. It's our Gwen. Heidi Hattendorf is a business transformation executive. He comes from a strong background in Motorola. Sandra Larkin is with Lead Like a Pro, and she is a leadership trainer. With Dr. Matt Leontine, who owns BLR Research. So he is our expert. He's on the faculty at UIC. His PhD is in procurement. He also is an engineer. So he's very strong in strategy, engineering, operations, and innovation. Nick Nowak is with Inspirity, and he's in training today because Inspirity focuses on, they have several services, but they're experts in HR solutions, and also insurance plans, especially if you're a smaller business, group insurance coverage. And again, my company, NWI Business Solutions, my expertise is sales. So I've been teaching that for over 30 years. And then I have a full array of marketing products that both Gwen and other members of our team provide, so that you can come to one place for a solution. So, okay, we did our housekeeping, and let's tell you about Mark. Okay. So, so I'm so glad to have you meet Mark. He currently right now is with Porte Brown, but he's been a senior tax manager and in the tax business for over 15 years. And he is not only an expert in corporate taxes, but he also works with individuals as well, ranging from answering your tax and business needs. Also, he's great at mergers and acquisitions, tax controversy, multi-state taxation, and R&D tax credits and incentives. Of course, he's a CPA with a master's from DePaul. He's also a member of the American Institute of Certified Public Accountants and the Illinois CPA Association. And I have to say, he's very involved in the community. He's actually a leader at my church's board and is very involved in serving our community. But what I didn't see on here, Mark, as we exchange places here too, is can you start off by explaining a little bit about your trips to Washington, D.C. and how you serve there. So I'm going to start sharing, and that way you can start sharing your slide deck, Mark.
Sure. Yeah, absolutely. So I I'm heavily involved, obviously, in tax legislation within our firm, and now actually new news that I haven't even updated my thing is I am a partner at at Porte Brown now. So
Congratulations.
here to so yeah.
Yeah.
So can you see my screen? I'm starting to share it.
Yeah.
Okay, good. Um, so what I do is obviously the firm, like Noreen was saying, I'm your typical CPA, handle taxes, handle pretty much everything on the tax side, from individuals to businesses, complex transactions, R&D tax credits, more on the manufacturing side, but also um, in M&A, someone when I'm buying and selling a business, but trying to put together what a deal looks like and the right structure for a company so that it can continue to go forward and make money, but do so by paying hopefully the least amount of taxes you possibly can along the way, which is usually a good thing. So one of the things that I've been involved in is through the AICPA, the American Institute of Certified Public Accountants, is all the tax news and updates that come out of Washington. So part of the people I'm connected with through the House Ways and Means Committee and also on other members of Congress, men and women, have kept me in the loop on different tax aspects. So as bills come out, as things are proposed, obviously in the past year, we have seen an enormous amount of uh, of tax changes. We had the CARES Act, right, that came out last March. We had a number of things happen over the year, obviously related to the pandemic itself. And then on December 27th, we had a new bill, the Consolidated Appropriations Act, signed. And these were huge pieces of legislation, not only from the COVID-19 pandemic level, but also from the tax and even regulatory level too. So I do a lot with that. Beyond that, I'm involved in what's typically happening in the tax world, whether it's, hey, tax rates or planning and really high level stuff. So at the end of the day, I stay very involved. A lot of late nights, a lot of right now Zoom calls like this and other things where just you're constantly on the know. And then I have probably a group of about 30 colleagues around the country that we constantly are in communication regarding different things that are coming out of Washington and stuff before it ever goes public. So it is keeps me and keeps our firm front and center in the stance of where things are at in tax policy. And obviously, with the new president, there is all kinds of questions whether there will be changes in tax policy going forward and all that. So I'll touch on all of that a little bit in my presentation, but I will jump in and we'll go from there. Um, so today we're going to talk about the PPP round 2 and all that. But before we even get to that, I kind of want to give you an idea of where we're at with things and kind of get us there, because obviously, a year ago at this time, probably most of us, we were aware that there was a pandemic, right? But we didn't really know what that looked like. It was in Wuhan, China, and it was spreading. And then next thing you know, you saw in Greece and Italy and Spain, there was cases, but you didn't really pay too much attention to it. At least I didn't, and my clients didn't seem to. And then obviously, by the time we got to the end of February, beginning of March, we started seeing that climb. We see locally certain cases pop up, and it was just very interesting how all that went. But with that, we shut down the economy. We shut down everything to keep people safe, and we needed to put money in the economy. And what you're going to find along the way is that people spend a lot of time um, trying to figure out, how do I keep my employees? And then the idea behind everything that the government did was that we wanted to keep money in the system, we wanted to keep businesses afloat, and we wanted to keep people employed so that at the end of the day, they weren't sending them to the unemployment line. Because if you think about the amount of people that could have been sent to the unemployment line, it would have sent the economy spiraling southward very quickly. So Treasury Secretary Steve Mnuchin at the time kind of worked on a bipartisan agreement to try to figure out, how do we make this happen? And so one of the first things they came out with was the FFCRA, which is the Family First Coronavirus Response Act, which basically said, hey, if you got employees that either one contact COVID, or are taking care of a family member with COVID, have COVID, or got to deal with kids that are remote work from school now, there's ways to continue to pay them and even though maybe they can't work during a certain period of time, and then they can get some payroll tax credits. So this came out first. Then we knew we needed more. So by the end of March, we had something called the CARES Act. And the CARES Act basically was this massive $1 trillion bill that was going to come into play and really fund different programs. One was the PPP, which was the largest pillar of that. And from there, we just continue to put money into the system and try to figure out how to keep things afloat. Now, certain industries have got the money and continue to stay strong and are set up well now going into 2021. Some restaurants and service industries, as you know, are hit hard, maybe even crushed to some level. And, it is a bad thing for them. And they're still in a position where they may not survive. So again, every business, every industry, all has different levels of good and bad that come with this. So with all that, all year we had the PPP that came out, and one of the things that was great about the PPP was you could calculate this amount of money by using your 2019 average payroll, and you would take it times a factor of 2.5, and you can apply for this loan. And in doing so, you're able to get this loan. And once you did the calculation, filled out the application, people started getting money fairly quickly. I think April 1st or 2nd last year was the first time you could apply. And literally within 10 days, $385 billion were sucked up in the system. And then we had like a week and a half where they put together they added another amendment onto it to add another 300 something billion dollars to it. And at the end of the day, they had almost $685 billion put into the PPP system, which was a lot of money, obviously. But one of the things that came of it, which was really interesting, was that initially everybody rushed out to try to get it. And smaller businesses were just kind of like, well, what do I do and all that. And I know myself, I was doing all-nighters trying to figure out what's going on with this and how do you make it work. And there were no rules. I mean, it was literally like, hey, let's create something out of thin air and let's try to implement it. And the banks you're going to go to the bank to get the money. And, but who knows what the rules are. We'll just keep changing them every day. And it was just kind of crazy. Obviously, with a pandemic that we've never had and never seen, this is what happens. So with that being said, if you remember going back to the beginning stages of the PPP and the pandemic, a lot of people got money. There was a lot of big money out there. And then the question became, hey, why are some of these organizations getting money? If you remember, there was some big publicity on Shake Shack getting money, Ruth Chris Steakhouse restaurant chain, the LA Lakers. They got, almost $10 billion in $10 million in PPP money. And so this became a contentious issue. And they didn't have rules, because the rules initially were like, hey, if you need the money, you think you need the money, just go out and apply for it and we'll give it to you based on your calculations. And then they later, a few weeks later, they kind of tweaked it and said, hey, look, you need to have economic uncertainty right now. And you got to also show that you don't have enough liquidity. Well, that just kind of changed the ball game. And then they came out even further and said, look, if you don't think you need the money, you need to return the money. And I spent the entire month of May talking to people like, well, Mark, what does that mean? Do I got to return my loan? Do I not? I don't know what to do. What does this even look like? And as we continued to move forward, they finally came out with, hey, if your loan is over $2 million, we're going to audit you. You better show that you needed the money. You better document it, that you had this economic uncertainty. And you need to show that your liquidity position was affected by the pandemic and that you still needed the PPP money in order to keep your people employed. If your loan was under $2 million, they're not going to audit you. They're going to basically provide you a safe harbor that said, hey, we're going to assume if you're under $2 million PPP loan that you did have economic uncertainty and that you didn't have enough liquidity. So we're really not going to bother you. So all that kind of started as time went on, by the time we got to June, we had a little bit of things settled. The issue at the beginning was you had to actually spend the money. You get the PPP loan, and originally you spent the money over an 8-week period of time on payroll, and you can use, at the time, I think it was 75% had to be used on payroll, 25% could be used on utilities, mortgage interest, and rents. And if you did all this over an 8-week period, you could apply for forgiveness, and the loan would be forgiven. I wouldn't have to pay it back, and that's how it was. So that was sounding like a great plan for everyone. Well, by the time we got to June, there were a lot of questions floating around. the IRS came out with a position that basically said, hey, the forgiveness of the loan, if you mean you spent the money properly, would be tax free to you. And so that was great. But the problem is the expenses associated with that loan were going to be non-deductible. And that was I spent hours and hours, I mean, hundreds of hours just dealing with that one issue. What does that mean? Why is this happening? Do I have to pay tax on it? Do I have to plan for this? All these different things. So with that being said, we finally got to the beginning of July and they kind of revamped the PPP program and came out with some new additional rules. And they came out with the Flexibility Act within it. And basically they said, hey, you could use 8 weeks to spend the money, but you can also use 24 weeks. And you can pick either or. And the idea behind that was that they knew people that got the money initially didn't calculate the money properly and they might have got a loan that was too big, or maybe the program wasn't designed properly. So if they give them 24 weeks to spend the money, then ideally most organizations could spend the money on payroll properly and keep their people employed and then apply for forgiveness and hopefully have done all the rules to meet the expectation of the PPP program to achieve the forgiveness. And so with when all that went down, it did provide some flexibility. They continue to add FAQs and different provisions within the SBA and the U.S. Treasury to modify the rules and make things more clear, which happened pretty much every day or every other day. But the big question that kind of continued to hang over everyone's head was, and I would talk about is, hey, the forgiveness of the loan is non-taxable, but the expenses associated with it, meaning the expenses on the wages, the rent, utility, mortgage interest, are non-deductible to the extent you used it for the loan. And that went on, and I figured, well, we'll have an answer by Labor Day. We'd have an answer by September, end of September, and we were not getting an answer. And obviously, by the time we hit October 1st, Congress kind of went into a 30-day, hey, the election's a month away, and we're not going to really be issuing any official guidance or new laws. So we're in a waiting game until the election was over. And so that along the way from June, they came out with, I think the House passed something called the Heroes Act, and then it didn't pass the Republican Party in the Senate, and the Republican Party passed the HEALS Act, and then all these different bills kept coming out, and they just kept failing, getting through Congress. So we get to the election, obviously, Joe Biden wins the election, and then Mitch McConnell, who was the Senate Majority Leader at the time, and Speaker Pelosi met and said they wanted to get a deal done. And there was a group of about 12 House and Senate bipartisan group that basically worked with their constituents over a 3-week period to hammer out a deal that would really kind of answer questions, put more money back in the system, and see if we can help. And keep in mind, post-election, post-Halloween, we had huge spikes in the pandemic happening and the spread of the virus, not only in the Chicagoland area, but all over the country and all over the world, that we went back to mitigating by shutting down again in many areas. And that sparked, Congress to really want to do something. And with a lame duck president at the time going out, they figured they can get something done. So by the time this happened, and passing a massive bill is something that is extremely difficult. So here we are, and we finally try to do tax planning during this, trying to talk to people about what does this look like became just a hassle. But no matter how you look at it, finally we got something done. Might have ruined my Christmas holiday, but that's okay. And on December 27th, former President Trump signed the Consolidated Appropriations Act of 2021. And here's what the thing about that was. That was about a 5,500 page bill. That's a lot of reading, a lot of stuff in there. And I've never seen anything so big in my life, and going through every detail. And the problem is there's so many things in there that if you skip over a page, you could miss something that is huge. But within that, there was a $900 billion stimulus bill that was going to help individuals and businesses. And in addition to that, there was the provisions in there for an additional $600 stimulus payment, economic payment to the American taxpayers if you met certain income levels. If you remember back at the CARES Act, they also sent out a stimulus payment to taxpayers and their dependents. And this was just another version of that. So I think it was 600 per taxpayer and 600 per dependent. So it did add up, and it was a nice thing. Um, Within that, I just kind of want to, before I get into some of the deeper parts of the PPP loan, the Consolidated Appropriations Act, you need to be aware of what's in there because this is fresh off the press, and a lot of people haven't really put out a lot of information on that. And the problem when you put out a bill on December 27th is you have people that are really just, they're in holiday time and they're not really thinking, what that means to them. And then, they finally come back to work in January and their new year resetting, obviously all the changes we have going on. And here we are now, February 4th, and you really don't have an idea what's in there. And we're already talking about a new stimulus bill in Congress right now that is being worked on. So we need to kind of address this first. So part of the Consolidated Appropriations Act, obviously I told you they had a second round of stimulus payments, but they also said, hey, on a PPP, we're going to give you a second round of PPP money. And what that meant was that, hey, if I got the PPP the first time last spring over the summer, and I spent the money and I applied for forgiveness, or I'm in the process of applying for forgiveness, I could actually go and apply potentially for another round of PPP money. So they put another $285 billion to the PPP program. They also expanded on something called the ERC, the Employee Retention Credit. And I'll get into that a little bit, but that's something that is very beneficial to certain businesses and organizations. And I find that it's very missed out there, and it's a payroll tax credit. They also changed things in their grant programs and how it's taxable, and increased unemployment benefits for people that were on unemployment and extended those rules out, and enhanced credits and deductions for 2020 and 2021. And a lot of expiring tax provisions that expired at December 31st, they extended and just modified going forward. So it did add some things. So let's talk about a few of those individual provisions. So one of the things is medical expenses. That's something that if I got a lot of out-of-pocket medical expenses that my insurance isn't covering, or, elderly that are in nursing homes or a lot of care, there's a lot of money that gets spent sometimes. And so you can deduct those expenses as long as they exceed, the rule was 10% of your adjusted gross income. So what they did is they reduced that to 7.5% of your adjusted gross income. On top of that, they increased the child tax credit and the earned income credit for the American taxpayers to give them a benefit to be able to get a larger amount and enhance the amount they can get. Charitable contributions, they gave an above the line deduction for that. Basically, some people they give some money away to charity, but they don't have enough given away to really itemize. And so they gave something where they can all get some benefit from this. And then people that in the pandemic haven't been able to pay their mortgage and maybe even starting to get foreclosed on. There's been some cases of that. And what they've done is that, so if someone gets their home foreclosed on and they have a loan, well, they don't, they leave their home or they move out of their home, but they still got to pay the loan back. If they walk away from the loan, the bank eats the loan. But the problem is that's the amount of loan that's forgiven is taxable income to the taxpayer, which could be, if they couldn't afford the house, they can't afford the tax. So they put in something and said, hey, you can be forgiven up to $750,000 of debt on your principal residence, so which is a good thing. And then still continue to deduct mortgage insurance and mortgage insurance premiums. One of the things that is big in this is that some people have had to take money out of their 401ks, out of their IRAs and defined benefit plans. And what they've done is they said, hey, if you take up to $100,000 out, normally, if you're not age 59 and a half, you would pay a 10% penalty. And also, by taking $100,000 out, you would have taxable income of $100,000. So obviously, when people got to take money out, they just take it out, right? They don't have any other choice. But the tax ramifications I always see are always, I take the money out in May and I need the money. And then all of a sudden, Mark calls me with my tax numbers in March or April, and I owe all this money that I don't have tax dollar to pay it. So what they did under this is they said, hey, if you take the money out for coronavirus related provisions, we're going to, just for 2020, we're going to waive the 10% penalty for early retirement distributions. And on top of that, we're not going to make you pick up the whole amount in 2020. We're going to make you spread it over a 3-year period. So, for example, if I took out, $90,000, I'd pick up $30,000 in 2020, 30,000 in 2021, 30,000 in 2022. And so that's something that's in there to help, one, spread out the tax burden, and two, don't not tax on additional penalty. So this was a good thing, and it's in play right now on the current 2020 tax return for taxpayers. On top of that, there's some payroll provisions, especially if you have a business out there and you're paying payroll. I mentioned earlier, the FFCRA, the Family First Coronavirus Response Act. They had the paid sick and paid family leave, and that's where basically up to either under the you can get paid up to 12 weeks if you had to take a leave of absence from work related to coronavirus. And when if the employer continued to pay you, basically the employer would get payroll tax credits, meaning the piece on their 941 that they pay the Social Security tax in. So essentially, it's putting cash back into the employer's pocket by keeping people employed. So that was a good thing. And then on top of that, I mentioned the ERC, which is the Employee Retention Credit. So this was an amazing thing that came out last year at the CARES Act. It got missed and set aside mostly because you either took the ERC or you took the PPP. You couldn't do both of them. And most businesses, they didn't want to rely on complicated tax calculations and payroll taxes and everything else. So they wanted the quick money and they applied for the PPP. And in most cases, the PPP obviously is probably the best route, especially a larger organization. But with the ERC, where you have lots of employees, what that said is, hey, and the rules were for ERC, you had to meet their standards. One, I had a government mandate that I had to be shut down. And what I mean by that is I have to be shut down, meaning the state of Illinois says, hey, Mark, your restaurant, you can't be open. We're shutting your doors. So I can't be open. So that would be a government shutdown. But if I choose to send my employees home and do remote working, that even though we have we're in different mitigation stages within the system, that is not a government mandate to shut down. That's me saying, hey, I got to keep people safe. I'm going to follow the rules, and we're just going to do that. So that was a little different. And then the other side of it, either you had the government shutdown, but what most people applied for was, hey, I had a 50% reduction in gross receipts, gross revenue from any quarter in 2020 compared to that same quarter of 2019. So, for example, if in the second quarter of 2020, my revenue was down 20%, 50% or more compared to the second quarter of 2019, then for that quarter, I would meet the test of the ERC. And behind that, what that would mean then is that for the first $10,000 of wages in that time period that I paid an employee, I would get a 50% credit, meaning, so if I had, 5 employees all making, let's say, $100,000 each that I'm paying them, then I would be able to get the first $10,000. So 5 times 10,000, $50,000 times 50%, I'd be able to get a $25,000 credit, which is cash back into the business owner's pocket. And so, but you had to meet one of those tests, government shutdown mandate or 50% reduction in gross receipts. So not everyone meant that. Under the Consolidated Appropriations Act that came out in December 27th, what they did is they said, hey, I know we originally said in the CARES Act that you could only take PPP or ERC, but we're now amending the CARES Act to say you could take the ERC going back to March 12th, 2020, and even if you took the PPP. So what I would tell you, if you have a business or if you know anyone with a business and they may meet one of those two standards, meaning one, they were shut down by a government mandate, or two, they had a 50% drop in revenue in one of those quarters, then even if they got the PPP, then they could also calculate and get this. Now, how do you do this? You either need to be working with a CPA firm like us, or you need to be with your payroll provider. The big payroll providers like ADP and Paychex and Paylocity, they're all pretty advanced where they should be able to handle this, and they have the system to do so. So again, depending on who helps you, but I would definitely talk to your accountant if you think this may apply to you, especially if you can go back to March 12th here and it may apply to you. Now, with that being said, the IRS, we're still waiting on guidance on how do you go back to March 12th and returns, or is there a new form to get those tax dollars back into your pocket. So we're still waiting on that. Hopefully, every day we look, I'm assuming maybe in the next week or two, we'll have that information. In addition to all that I just mentioned from the CARES Act, there is the um, for they expanded in the Consolidated Appropriations Act, the ERC, out 6 months. So originally it was going to expire December 31st, 2020, and now they're going to kick it back out into June 30th of 2021. And basically what they've done is for the first and second quarter of 2021, all you would need to meet is a 20% reduction in gross receipts. And you would also need to have the first 10,000 wages isn't just for the entire year, but it's per quarter for 2021, and the credit is 70%. So it's a much more lucrative thing that's out there. What else I'm going to touch on here is some business provisions. So one of the big things that, as I mentioned in my earlier on, was like, hey, how in the world I got this PPP money? I spent the money. I'm applying for forgiveness. I got the loan forgiven. So in theory, the IRS said originally that forgiveness is not income to me, so I don't have to worry about that when I write the loan off. But what about the expenses? And we obviously, as I told you, we waited all year. I even had clients doing tax planning to say, hey, you just add the money back and we got to plan it that way. But by the time we got this time, they finally made it so that the expenses be fully deductible using as long as you use your PPP money. So for example, I'm a small manufacturer and I got $1 million PPP loan and I spent the money over 24 weeks on my payroll. I kept my employees and I'm continuing, and it really helped keep my business afloat. I applied for forgiveness and now I receive forgiveness. I get to write the loan off. I don't have to recognize income. Essentially, it's tax exempt income. And then the expenses are fully deductible, meaning the $1 million of wages that I used against that PPP loan are fully deductible. So this was a great set of news. And I don't always say things, there's always the saying that nothing's free in this world. And I'm kind of a firm believer in that to some level, but this is pretty much free money now. I mean, it was put out there. If you follow the rules, it's free money. You don't have to pick up any tax dollars on it. You don't have to pay it back. And so it was a really nice thing. Something called bringing back the business lunch. So all business owners out there, they not right now, but they normally wine and dine their clients, go to lunches, network with people, and whatever the cost of the meal is, you expense it on your books. And the reality is, for tax purposes, you're only allowed a 50% deduction on it. 50% of it's disallowed and essentially increases your taxable income. And what former President Trump he wanted into this and put in there was this idea that for 2021 and 2022, to make all meals and, lunches or dinners or whatever you're doing with clients and customers fully deductible, 100% deductible. So again, in 2021 and 2022, the meals are fully deductible. The idea behind this is as we come through the pandemic, as we get vaccinated, as whatever the case may be, as it settles in and things mitigation lessons and we start to open restaurants and stuff and people start to get together, whether it's dining outside or inside, that people take advantage of that and have the tax incentive to really support the restaurant industry, support small business, and deduct everything fully that way. Another piece of this is something, and this is also in there, and it's been overlooked a lot. It's called the Shuttered Venue Operators Grant. So this is for movie theaters, and concert venues, anything big or small that would be in that venue type field. And the idea was, hey, those people said, I can get the PPP loan, but if we can't even be open, why am I getting the PPP loan? Because I'm not keeping my employees. And a lot of them basically shut their doors and I just basically said, I'm going to, wait this out and see what happens, because we can't actually have any concerts. We can't have any movies. We can't even be open in most states. So in the Consolidated Appropriations Act, they came out with this thing called the Shuttered Venue Operators Grant. Essentially, if you met one of those type of venues, you can get a grant, which is free money to you, which basically is calculated 45% of your 2019 gross revenue. So you would go back to the 19 year and say, okay, my gross revenue is $100,000, $1 million. Well, if it's $1 million, 45% of that is $450,000. I can get a grant to that. And then basically I had to use it on, there's a long laundry list of things I can use it on, but all for my business and not just payroll, but, improvements and other normal, ordinary course of business operations. And then you can also, after that, get another grant that basically, that's 50% of that amount. So again, there's some money in here. We haven't seen a lot of movement on it because I don't think people understand this. But if you know anyone in that industry, this is something that they need to be aware of. Another quick thing I'm going to mention that's very important and very popular is the EIDL advance and the SBA loan payments. So back in March and April of last year, all these loan programs came out. Obviously, PPP was the big one, but there was the EIDL, which was a loan you could apply for with the SBA. And if you got approved for that, you got the loan, and you'd have to pay that back with the regular interest rate that the SBA provided you in the terms of the payback, just like any other loan. But then on top of that, they had something called the EIDL advance or the EIDL grant. And that's where people could get $1,000 up to $10,000 of free money from this EIDL, from the SBA. And a lot of my clients got that, or a lot of people got that as I talked to around the country. And what has happened with that was originally was, hey, if I got this amount of money, this $10,000, it's free money to me, but I have to reduce my loan forgiveness on the PPP by the amount of this. So with the Consolidated Appropriations Act, they basically removed that provision from the CARES Act to allow you to basically have free money and not have to reduce any forgiveness or have to pick it up in the income. Also, if any of you on this call had a SBA loan that was already in existence prior to the CARES Act, a lot of small businesses get SBA loans to fund their initial operations. They basically allowed the SBA to make interest and principal payments for you for 6 months. So for 6 months, basically, you didn't have to make a payment. They were taking care of it on their behalf. But they were going to originally treat that, hey, that was forgiveness of income because you're not having to pay it. And what they did under the Consolidated Appropriations Act is make it so that it's not taxable to you now. So, which is a good thing. So the Paycheck Protection Program, I kind of told you the nuts and bolts of it from before, the idea of you got this loan, you use your average 2019 payroll times a factor of 2.5. I got the money. Once I got the money, I had originally 8 weeks, but then 24 weeks to spend the money. And if I did so, I could apply for forgiveness and wash my hands of it and walk away and feel like I accomplished something. At least that's what most people would hope for. With the Consolidated Appropriations Act, they added a few things. One, they said, hey, there are many people out there that never applied for the PPP loan the first time. And the reason why is they just felt like they didn't need the money, or maybe they weren't working with the right people that could help them advise them on it. And they just kind of missed the boat. And whether you know it or not, but on July 31st, the PPP loan program shut down altogether. So if you didn't get a loan prior to that, you're kind of stuck in the cold. So what they did is they reopened it up and they put a $35 billion in there allocated to essentially allow people who haven't applied for the loan the first time to go out and apply for it. And based on the old rules, and they have until March 31st of 2021, so 2 more months, to apply for that. So if you know anyone that never got the PPP loan and you think maybe they need it, or maybe it's you, I would really think about applying for the first round of PPP. Again, same rules, nothing's different there, just the opportunity to apply for it. On top of that, some people got the loan and got too much money and they kind of kept it in their bank account. And what they're doing is they kind of provide the safe harbor, like they're saying, look, if you got too much money and you're not going to get forgiven, you have this ability to return some of it. So they kind of put that in there so that I'm not aware of too many people that have had this issue, but it is out there. And on top of that, they created PPP round 2 or 2.0, as I call it. And this essentially is people who have spent the first round of PPP and are wanting to get additional money. Now, what does that mean? So if you got the first round of PPP and you haven't applied for forgiveness yet, that's okay. Although I would recommend you apply for forgiveness sooner than later, but you at least had to have spent the money over that 24-week period. On top of that, there are specific rules that you just can't apply for it just like the first time. So there are specific rules for it. but you have until March 31st of this year to apply for it. So again, you have 2 more months. Now, will they move that date out? I don't know. I quite possibly we'll see. They may add more money into it. I guess it really depends on the need for the program and the need for what's going on. So, what are some of the rules of this? If you know, same rules as for before. If you got the loan and you don't get it forgiven, you got it's a 5-year term, 1% interest rate. If you do the rules and you spend it on payroll, and I think the rule is now you got to spend it on 60% on payroll and 40% can be used on rent, utilities, and mortgage interest. I always recommend use it all on payroll if you can. It's just what the intention of it was for. But if you don't have enough and you're kind of close to the borderline, you can use some of your those other things if you have them. Um, so what do you need? What's different now about PPP compared to the first time? So for the second round of PPP, you would need to have 300 or fewer employees. So the first time you just needed 500 or fewer. Now it's 300 or fewer. So probably everyone on the call doesn't have over 300 employees, and that's probably fine. In addition to that, you would also have to demonstrate that you've experienced a 25% drop in gross receipts in any quarter in 2020 compared to the same quarter of 2019. So again, remember, you probably, what did he say that again? In the ERC, one of the requirements was you had to have a 50% reduction in revenue to qualify for one of the provisions. For PPP 2.0, you got to at least demonstrate you have a 25% drop in gross receipts or revenue in any quarter. So that's any quarter of 2020. So if you're going through your records and you look, hey, third quarter, um, at September 30th, 2020, my revenue compared to September 30th, 2019 is down 32%, then you would qualify, and you have over 300 employees, you would qualify to apply for a second round of PPP. And the calculation is the same as last time. But here's the thing: you either get to use your 2019 average payroll or your 2020 average payroll times 2.5 to get the loan, plus some other small adjustments, which I won't get into. But and the loan can't exceed $2 million. Um, if your loan is under $150,000, you really don't have to provide any support to your lending institution you're with or the bank. Anything from 150,000 to 2 million, they're going to require some sort of financials or some income statement and analysis to demonstrate that you have that 25% or more drop in revenue. So it's something to look into for you. In addition to that, if you're not able to get this if you have any affiliated entities in the People's Republic of China or under any Foreign Agent Registration Act. There's certain countries they kind of said, hey, if you got any business in these countries, we're not going to allow you to take it. And on top of that, if you got that grant I mentioned before under the Shuttered Venue Operators Program, you can't get PPP 2.0 also. Um, Gross receipts, you hear me use that term. The idea is that's your gross revenue, so your sales, right? But in addition to that, you just don't use your sales for 2020 quarter compared to 19. You have to add in if you got interest and dividends and any other form of income on your business return. So it's something to keep in mind. I would say this: I would always look at sales first and see what is my drop in revenue. Talking to a lot of people out there and talking to our client base, a lot of businesses haven't suffered that 25% drop. In the manufacturing world, we're finding a lot of people that actually either maintained or even, increased their sales last year. Where I'm also finding this is in contractors, construction companies. They had a strong 2020 because their backlog headed into 2020 was good, but their 2021 backlog is not as good, and that's where they might take a hit. So you might see some changes coming down the road that how we can extend the program out. But as of this morning, of the 285 billion that they've allocated to this second round of PPP, only 70, I think it's 70 billion of it has been used. So not even a third of the money has been used up and applied for. So what you're finding is that most people have not either applied for this, they're not aware of it, or they don't qualify. And I would say most businesses are not going to qualify. And the reason why they made it so you had a 25% drop in revenue is so that, it's really meant for the businesses that have taken a hit and that really need the money to stay alive and keep their people employed. This also applies, so your type of entities, you get this, your typical businesses, C Corps and S Corps, partnerships, but also, your self-employed people, Schedule C people, they all get a chance to apply for this, just like last time. So nothing's different there. Um, and you can spend the money over 8 weeks or 24 weeks and then apply for forgiveness. So that's about it. Another thing they added on to the PPP and the consolidated is on the forgiveness side. So they kind of added some streamlined forgiveness process for any loan under $150,000. So if you've been through this program, you have to spend the money and you have to do all these calculations, and then there's all this. The application requires you to provide all the support. And when you go to do the forgiveness, you go to your bank portal and you upload all this stuff, answer a million questions. And some banks make it easy. Some banks have made it difficult. It really depends on who you bank with. And so what they did under this is they said, if your loan's under $150,000, we're going to streamline it. Basically, you'll fill out a form 3508S, and we will make it so that you can actually fill it out one-page affidavit that you sign that basically says, hey, my loan's under this, and you're going to receive automatic forgiveness. So it made it a lot easier for people out there. And that's for PPP 1 and PPP 2. So keep that in mind. If your loan is over $150,000, but you haven't reduced your full-time equivalent employees, meaning you didn't get rid of anyone, and you didn't reduce their salaries, then you can just apply with this EZ form. And the idea behind the EZ form is just less questions on there and less support to apply for forgiveness. And then anything that you might have some FTE adjustments or things a little more complicated, Form 3508 is out there, and all that. If your loan's over $2 million, you're also gonna have to fill out a Form 3509. That basically is a loan necessity questionnaire, which basically gets into all kinds of your business purpose and your liquidity purpose. And that's where they're going to really scrutinize whether you needed the money or not and ask you a series of questions. So there's a lot going on there. And I would just say at the end of the day that if you have any questions, reach out to me. We have a PPP team here that I lead at Porte Brown, sizable team where, besides our regular work, we're spending time on advising clients, but also really, handling their forgiveness process and working through the calculations. Because even though it seems like on the surface they've done it all, I have found many times that many people out there just don't know how to fill out the forms, get the right reports from the payroll companies, put together the information, because they're so nervous that they're not going to get the loan forgiven. So they want someone to kind of do it for them. And even like yesterday, I walked a client, spent 2.5 hours on the phone walking them through uploading various entities they have through the portal process of the forgiveness. So a lot going on there. So I have covered a enormous amount of material in a short period of time. And my contact information is up on the screen here. But what I would say is along the way, this stuff is just constantly changing, as you can see. This past year has proven to be just one big headache for everyone in some form or fashion with change. If you don't adapt to change, then I think this year taught you needed to learn to adapt to change. And if you're still fighting it, I would recommend you just kind of give in and go for change a little bit. It'd be good for you. But there is provisions in Congress right now to push through a new stimulus bill. So as you remember, Joe Biden won the election. The House of Representatives is democratically controlled, still is run by Speaker Pelosi. The Senate side, the Republicans lost the majority there, and through that Georgia runoff, they lost both seats. So now you're tied there. So meaning the vice president breaks the tie. You have now the Senate controlled by the Democrats. So the entire executive branch and Congress is run by the Democrats in the majority. So what does that mean? Everyone's like, oh no, my taxes are going to go up now or whatever. I will tell you this, to pass a bill in Congress, tax bill or any bill, as we always see, you normally need a majority of the votes in the House. So they probably get it. And they'd also need 2/3 of the vote, or 60, they would need 60 votes essentially in the Senate in order to pass a bill through. And then if they got them through both, then the president can sign it or veto it. So you would need 10 Republican senators to vote on something to pass. So that's where right now, it's not as easy to pass a bill, and you're going to need to work with the other side, and it has to be bipartisan support. With that being said, though, we have found that different Congresses have found ways and loopholes to push certain legislation through. When President Obama was in office, they passed the Affordable Care Act by passing it through a Democratic-controlled House and Senate at the time, by not having any Republicans vote for it, and they basically put it through on almost like a balancing budget act. And then when Trump took office, he tried to repeal the Affordable Care Act, but then he put through the Tax Cuts and Jobs Act the same way through a legislative spending bill. So I'm not saying that they're working on that now, but there is a strong possibility. The Senate Majority Leader now is Chuck Schumer, and he said we're moving forward with this new provisions irrespective of where the Republicans are. So two of the big things out there right now is, one, they want to put more money into the hands of the American taxpayers. So as you recall, they just issued $600 to each American. I think it was if your income is under 150,000 if you're married, and 75,000 if you're single. But they want to get that number to 2,000, so they would want to issue another $1,400. I don't know about dependents. We haven't, if that would be $1,400 or it would be something less. So they're working through that. And then Illinois Senator Dick Durbin presented yesterday and introduced that all these people receiving unemployment benefits in our country haven't had any taxes withheld on that. And they're going to have a big surprise when they have to pay taxes on that when they file their return. So he's trying to push something through to make the first $10,200 of it tax-free. I don't know if they'll get that through, considering that we are now in February of 2021, and the IRS opens the e-filing system for the 1040s next Friday, of next week, the 12th. And I don't know how they can push this through. So they're looking to move this through fast. And we don't know if there's be other provisions in there. But I would tell you this, it's changing constantly, and I will keep you updated as we go along. So thank you all for listening. And let me know if you have any questions here.
Yes. So Mark is amazing, and there's so much information. Thank goodness we have people like you who understand all of it, who can explain it to us. So we do have a couple of questions that have come through. And so at this time also, you can add your questions to the chat box and unmute yourself. But one of them that came through with actually Al had asked is, can ERC be filed anytime prior to June 30th, 2021?
Yeah, good question. So Al, the ERC, the Employee Retention Credit, there's two components of it that you remember. So one is you have the 2020 piece of it going back to March 12th. If you meet the standards, you can do it. You're going to have to file some sort of amended return, most likely. That's what we're still waiting on Congress to provide, or not even Congress, but the IRS to provide some guidance on what that looks like. On top of that, for 2021, you have it for the first two quarters, meaning, so the first quarter of 2021, I mean, you'll, at March 31st, then you're going to file payroll reports, right? 941. On that 941 that gets filed in April, you will, if you qualify, you're going to put in your ERC credits. Same thing through June 30th. If you calculate it, you're going to file it on your 941. If you get into September or October and you're like, wow, I think I missed that boat, you're going to be able to amend or whatever the rules the IRS comes out with to get it. So yeah, but the idea is you can pay and get those ERC credits through June 30th of this year. I suspect that number may get moved out at some point in time. So.
Okay. That's great. I know I had in talking about the ERC, in fact, Rebecca's on the line here too. And again, she's an HR expert and works a lot with apprenticeships, and his manufacturers are still having just the hardest time finding talent. Does this help, Becky, at all with funding the apprenticeship program or the on-the-job training programs? Or are they?
I don't believe it helps in funding it. I think it helps in incentivizing the employers to, one, retain the employees that they have, and potentially, potentially have the opportunity to bring additional employees on at this point. I think that's where this is going to come in really handy as they work through their strategies in hiring and retention, I think this is what's really going to help them do that.
As well. Okay. That's great. Thank you. And I just, like, I had a question and it just kind of went right through my head. Oh, I know. For the first round of the PPP loans, in talking with smaller businesses, if they were banking with a large institution, and I won't mention any names because we have some representatives here, it just took forever for them to get their act together, to have the paperwork. But they had recommended that we stay with our personal bank to file. So now with the second, like for instance, I was fortunate enough to get that first round of funding. So for the second round, Mark, should we go back to the same bank that we applied the first time?
Great question. You can go back to the same bank you applied. It would probably be the easiest thing for you, but you don't have to go back to the. So if, let's say you got your PPP loan from Chase, and you're like, you know what, I'm just sick and tired of dealing with Chase, and my local community bank, wherever that is, smaller bank, can deal with it. You can go there. But I will tell you this: no matter how you do it, it's going to be easier to just go back to the same bank because they have your information. So,
can I share a little? Something that happened to us the first time around on that.
Yeah.
We're Bank of America business customers and found that BOA refused to help us with the first round of PPP because we didn't have a lending relationship with them. In other words, that was, as far as I know, they were the only bank that had that qualifier in place. And I took that very, very personally because I interpreted that as if to say they're interested in helping people with PPP only if they have a loan from the bank. In other words, the bank was looking out for themselves. And so we're very fortunate to find, and in fact, it was Kyra who helped push me towards a smaller bank through an organization we work with that helped us get funding for the first round and is ultimately leading us to abandon Bank of America. Magically, Bank of America has found religion this time around and they don't have that qualifier in there. It doesn't matter, the damage was done. That was the most vulnerable time for us as a business, and for them to shut the door and say, nah, if you don't have a loan with us, go pound sand. I took that very personally. So just a heads up for those of you who are BOA customers, be careful where you bank.
yeah, and that's not only the only bank, as Rick had just mentioned. There are some others that really kind of said, hey, we're going to take care of our top line relationships first, especially the bigger banks. And I, to some level, I can get that. But what it did is it really, like Rick said, it put bad taste in certain people's mouth, especially if you're even banking with them and they still did that to you. And so a lot of the small banks in the Chicagoland area, the community banks of some kind, even the Wintrust banks, which are, the Wintrust is a big name, but small community banks, they jumped all over that saying, hey, they don't want to give you the loan, come by us. Even online lenders were doing it. And it became very easy. And the idea is, hey, if we open it up, then maybe then you'd move your business relationships and loans and everything else to us. So it was a good thing for them to jump on. And I can tell you also that on the forgiveness side, these portals on the bigger banks have been kind of a nightmare. So.
That's so Mark, I do have, so many of us, hopefully all of us, have some type of a relationship with an accounting firm or their favorite accountant. Some of us are happy with them, and I've heard from some of my clients that they haven't been too happy. And being that it's right before tax time, so so how would you advise somebody then to, like, I'd like to refer them to you, but we hear the fear that, boy, when you change accountants and firms, you are going to light up to be audited, and how do you make that transition? So, because I would really love to introduce them to you and have them start a conversation, but is that?
Absolutely. I run into this all the time, and I talk to people, whether they are with accounting firm, whether it's the individual, their business, whoever. And I always say, if you like your accountant and you're happy with the relationship, you got to trust the relationship. And I think we are considered one of the more trusted advisors. A lot of people don't trust their lawyers. They don't trust their insurance people, but they trust their accountants typically, because I always tell people, I know more about someone's personal life than their spouses do half the time. Because I see things in their bank accounts that maybe others don't get to see. And again, so there's a lot of trust there. With that being said, if they have a great relationship, I'll say, look, here's what I can do for you. I'd love to work with you, but I'm not going to try to pull you away from someone because you have a good relationship. But if someone is like unhappy and they're not getting any kind of service, or they pick up the phone and call and, no one ever responds back, and whatever the case may be, I would be happy to talk to anyone, happy to work with just about anyone, and on top of that, the idea of being audited, there's a lot of old wives' tales on being audited. Changing accounting firms doesn't get you audited. Filing an amended return doesn't get you audited. Filing an extension doesn't get you audited. These are all just, I don't know. I think some old guys from the 60s kind of created this fear in the system.
Oh my gosh.
But in general, the way you get audited is either one of two ways. One, you either get picked out of a lottery system and they decide to audit you and it's just random. Or two, you have something on your return that's so inconsistent with what their system says. Meaning you got $100,000 in sales and you got, $80,000 in expense, and you have this $20,000 profit. Year after year after year, you're kind of in that range. And then all of a sudden you have $100,000 in revenue and you have $4 million in expense. That's going to send a red flag saying either they made an error or they're pulling a fast one. And that sends you into the audit path.
Yeah. Thank you for clearing that up, because I feel a lot more comfortable with that.
If I can share a little experience on that side,
Sure.
Mark has been my accountant for over 20 years on the personal side, but I've been in business for 4. My numbers have always been whistle clean. I've never been hit with an audit or had any fear of it whatsoever. I trust the guy and the organization with our numbers completely.
It's so great. Rick, thank you so much for putting that. Yes.
And I've known Rick for 30 years.
Yep.
Since high school. So yeah.
Well, that's great.
I'm sorry.
And we have the same haircut, by the way. So which is,
You go to the same barber, huh?
yeah, we do.
You
Yeah.
can get one free.
Oh, more questions for Mark.
Mark, I have a quick question for you. What is your region? Are you just in the Chicagoland area?
Yeah. Our firm's just strictly Chicago. Although I work with clients literally everywhere around the country and around the globe. Like for example, I get calls, hey, we're a California company. Can you even work with us? Absolutely, yes. And people are like, well, do you understand California taxes? I know enough in every state to be dangerous, depending on the but we have an entire department, a SALT department, state and local tax department, that all they do is deal with state and taxes. And I'd stay more on the federal level, but so we have no problem operating there. I also lead our international tax area. So I have clients all over the globe, India, China, all the way through Europe. I mean, it's Dubai. I mean, so yeah, we have 5 locations in the Chicagoland area, but with the way our system and the cloud and obviously now everything is just virtual, you can work with anyone anywhere.
Mm-hmm.
And I can put a background up and I could be laid on a beach and you would think I have Rick's background. So yeah.
That's great.
Right. Prove to me you're in Chicago, Mark. Prove
Sure,
it.
yes.
Yeah.
Well,
Thank you.
Thank you. Thanks, Becky, too. So Mark, Al did ask a question about international taxation and stuff too, and that is one of the expertise of your firm.
Yeah.
Right? So
Yeah.
great. I just want to make sure everyone knew that. Well, it's wonderful. Now, after this is over and you get the slides and you're talking to your colleagues and more questions come up, again, the slide deck will have my contact information. It will have Mark's information. And also too, we would love to do a discovery session with you. So, especially if your sales have dropped or your marketing has dropped, and a big reason why is that, people have had to change their target markets and have had to reinvent themselves. And we have a whole new program, both as the advisory board, and we have this new learning hub that opened where we take you through these ideation sessions. So you can go to Calendly on Monday and Fridays. I have open hours, but you can also email me and we will set up these are complimentary sessions. No one's trying to sell you anything, but we are here as your own little board of advisors. So especially if you need to get someone else's opinion who is not on your payroll, and that's why we formulated this advisory team. And I do see that we have quite a few, many of us have an extensive background in manufacturing, also in medical, professional services, as well. So we have some other exciting things for us. So Mark, fabulous job as usual. So thank you. I took lots of notes. And so if you've not done this already in the chat too. We want you to, tell us a little bit more about your company or what the service is, and just take, a few minutes to, you can put down in there, what you do. This is a time for you to promote your little commercial, and we'll make sure that we share that information with everyone. And slides are moving forward here. Just a second. Okay. And I think we asked you this on your registration, but also too, are you interested in receiving communication from us? So we kind of put it this way too, is that, if you're not, you're always welcome to unsubscribe too, but please indicate that if you're not interested in stuff too, just put a little note in the, in the chat, just saying, no, thank you. But what we do is quarterly now we are doing different presentations based on what you need. So we need your feedback on what problems and issues and training. And also, if you're an excellent trainer in a particular area that we're missing and you see there's high demand, we'd like to talk to you about being on our board and also being a speaker. This deck will also have some great resources for you. We do a lot of work with the IMEC. So if you're in manufacturing and you don't know this organization, please go to their website. They have a huge team of professionals that provide webinars and support, and we're one of their preferred providers on the sales and marketing side. But they also have data on performance data. So who should you sell to? What are your target? What's going on with your target markets and industries? So they're always updating that as well. We also too have the information about the Small Business Development Center. And the webinars that they have. There's a link here that Gwen makes up all the slides. Thank you, Gwen. They're beautiful. And then Dr. Matt provided a safe work playbook. There's actually 2 volumes since COVID started. So again, I know several of you are with HR too, or you are your own HR, but there is, and Nick from Insperity could be very helpful with this too, but here's a little handbook that is free to you as well. So we have that resource, and we'd love any new resources. So if you have some resources that your company provides, please, put it in the chat box or email it to us. We are also looking for visionary leaders. So what we do is we meet twice a month, the first Thursday of every month, and the third Friday of the month in the morning. And what we do in between these webinars is that we ask an innovative leader to come in and tell about their business. In fact, I'm going to pick on Kyra because she's actually, Becky and I both have worked with Kyra before, and Kyra Tillman, and we ask you to come in and tell your story about your business, about how, especially now, how are you surviving COVID? What have you done differently? And then you get to sit with this board, and again, it's all confidential, and ask us questions. And it's our job then to either make referrals for you, introduce you to potential clients, give you resources, and basically pick our brains. And if you like the relationship, then we can actually become your board of directors. We have a program like that, but we'd love to get your story out there. And then also too, then we brag about you on social media, and it's a great PR opportunity as well. Because, you know me, all about marketing and sales, right? So our webinars that are coming up and our roundtable discussions. So we have, and these are, actually, we're just discussing the order, but I believe that Becky actually and Nick and Sandra are going to be up next talking about workforce development and virtual world. And really looking at, how do you visualizing a new workforce that works for the C-suite team and businesses, but that are virtual. And how do you hire for a virtual team as well is a very big question. Becky, is there anything that you wanted to add on that topic? And that would be in March, April. I put you on.
No, I think you covered everything.
Okay.
Yeah.
Thank you. Thanks, Becky. Operations, Dr. Matt Leontine is going to discuss too, doing your business analysis. He did do a great program, which you can see on our website, on building your business strategy. But now looking at your business analytics, let's look at what happened last year. Let's look at your sourcing, especially too. So, right now we're trying to reshore the sourcing, or at least, divide it. And looking at your supply chain, and he is an expert. He has his PhD in supply chain, and he runs the graduate program at UIC. So that is going to be fabulous. And also, again, we talked about a reshoring roundtable where we're inviting the business owners to come in, and we're going to put you in groups in the Zoom rooms and have you talk about and share ideas on, you know, what happened when you no longer had that vendor, you know, overseas, and that you know, door got closed during COVID, and what are you doing now? And again, I just want to remind everyone, if you lost business overseas, like to China or wherever in the past, and you used to make that widget that now all the business went over to China, I'm really encouraging you for you to start making that again, because many businesses are trying to reshore here in the States. And I have found with my clients that their business has really increased, but no one knew that they made that anymore. So we've got to add it to your website. You've got to put it out there on social media. You have to reach out to your past clients and say, hey, we're making this now, you know, come and buy from us. And then of course, direct mail and digital marketing is another topic too. Believe it or not, that is a hit right now, is using the old mail system. And oh, my slides weren't advancing, and I'm having a connection problem too. So, okay. Hopefully you guys can still hear me. We talked about the innovation workshops that we actually do have, and they're about to go live on our NWI Business Learning Hub. And we're also piloting a kind of matchmaking program for businesses, especially for manufacturers. So if you really want to do business with the big guys, we're trying to introduce the little guys and the big guys together on this interactive web portal as well. And of course, we're looking for wonderful members. So whatever your expertise is, we try not to overlap services, but boy, we really, there's so many services and expertise. They're so refined right now. So please reach out to us about joining our board of advisors as well. So again, Mark, I want to thank you for your time and effort, and for our panel, our members of the NWI Executive Advisory Board. They're shown here again for sponsoring this event too. And thank you for all of you for taking time to even just participate and observe. So Mark, again, great job. Thank you so much. And everyone stay safe if you're in the Chicagoland area. You're gonna get hit with more snow. Okay, so bye everyone. Thank you. Thanks again, Mark.
Thank you.
Thank you.